It's the time of the year when we file taxes and consult CAs and research ways in which we can save every rupee from the taxman. But if tax saving is your kryptonite, then we have just the perfect bit of news to cheer you up. So Finance Minister Nirmala Sitharaman has brought about changes in the new income tax regime in this budget in order to make it more attractive for taxpayers who do not have rebates and investments to claim as exemption. The new tax slabs mean that anyone with income up to 7.5 lakh rupees will have zero tax liability. But for those who receive rental income, this limit can be increased to an even higher amount of 10 lakh. Hello everyone, I'm Hemant Abhishek and welcome to a brand new edition of Paisa Wasool. Today we'll discuss how rental income of up to rupees 10 lakh can attract zero taxes. Let's dive in. So the new tax regime was introduced to provide individuals with increased flexibility in optimizing their tax savings. But by claiming appropriate exemptions, one can minimize their tax liability effectively. Firstly, let us tell you how you do not have to pay any income tax if you earn up to rupees 7.5 lakhs under the new income tax regime. So, if your total income is rupees 7.5 lakhs, then first and foremost, by availing a standard deduction of 50,000 rupees, your taxable income comes down to rupees 7 lakhs. Next up, the first 3 lakh rupees are exempt from any income tax. Then for the next 3 lakhs in the slot between rupees 3 lakh to 6 lakhs income, you have to pay 5% income tax, which comes up to 15,000 rupees. For the remaining 1 lakh income between rupees 6 lakh and 7 lakh, you have to pay 10% tax, which comes up to 10,000 rupees. So when we add the 15,000 and 10,000 we calculated for the income brackets, your total tax liability comes up to rupees 25,000. And then you can avail a rebate of rupees 25,000 under the section 87A, which brings your tax liability down to a big fat zero. Now for the rental income bit. As per tax experts, if an individual has only rental income and no other income and deduction, then they can receive rental income up to rupees 10 lakh without triggering any tax liability. We'll tell you how. So rental income from house property is taxable, barring deductions related to specific expenditures. These expenses include property tax paid on the said house and interest paid on home loan. And the tax regime also allows a standard deduction of 30% on net annual value towards repairs and maintenance of the said property. So let's take into consideration a 30% standard deduction in case the landlord receives a total of 10 lakh as rent. Then after standard deduction, the exemption comes up to rupees 3 lakhs. And when this deduction for specific expenditures is subtracted from the rupees 10 lakh collected as rent, it comes down to the magical figure of rupees 7 lakhs, which is tax-free under the new tax regime. So in this case, the landlord whose only source of income is rent will not have to pay any tax. Apart from this, it is always advisable to evaluate your options. Compare the tax savings in both the tax regimes and consider investing in tax-saving instruments to further reduce your tax liability. By following these strategies, you can effectively achieve substantial tax savings. That's all for today. We'll return in the next video with some more wealth and investment tips and tax saving tricks. Till then, goodbye, take care, and keep wasooling paisa, because if it's not value for money, it's not worth it.